Well, good evening, all. Ira Epstein with your financial market wrap-up. And this wrap-up is for the evening of Thursday, the 16th of May, 2024. The time getting on at 5:30 p.m. Central Time. Now, I did a special report on gold in both the futures and GLD. I thought it appropriate given how the market has rallied. We're up at some resistance, the pullback that I look for, and what to do with that. We'll talk about that at the end of this video. I'll show you in the video how you can view it as well. Fair enough? All right. Let's take a look at what we have tomorrow. Early on at 9 in the morning, we're going to get the Conference Board morning release of their monthly leading, coincident, and lagging economic indicators. Fed Governor Waller will speak also at 9:15. We had a number of Fed governors speak today, and they were uniform in all saying higher for longer. So you take from it what you want. The bonds and notes didn't do very much with it. Yes, you did go back from 4.33.5 to about 4.38 in the 10-year note. Okay, so we'll see what that does, but it's not a dramatic move one way or the other. The coffee market's still under some pressure. We're getting a little bit of a bid in the bonds and the notes. You're not hearing very much about what's going on between Israel and Hamas, except the pier that the United States Army has built is now installed. It is ready to start taking trucks, as I understand it. It can handle up to 90 a day to begin with and then move to 150. It's still not enough to break the famine that's going on, but it's a beginning. Let's look at it that way. Not hearing an awful lot other than supposedly 100 of the Hamas soldiers have been killed. Now, that's not a brigade. Israel said that there were 4 brigades there that they were going after. So I don't know where they're at with that and what's going on. The news is very, very little coming out of there right now. Is that by design? It may be. In the stock market, we're pulling back ever so slightly. You know, this has been a phenomenal week of news, right? And that's what we went through. The next big piece of news, for me at least, will be the next jobs report this month that we look at. And that will give us another idea as to how we're doing. If you saw the unemployment claims today, they were down 10,000. So we still have a relatively strong labor market. And some of the Fed members made mention of that as long as it's strong, how do you really break the inflation spiral here that we've got going on? You saw Walmart earnings were stellar, and that's because investors are looking for bargains. It's really that simple. And that's why McDonald's is going with $5 meals starting in June again, and we'll all be there getting them if you're a meat eater. All right. So let's take a look, if we could, at what the markets are doing. On the S&P, as you can see, you're sitting here at these high closes, up 73 points for the week, up 1.4%. Support's back at the 51.21 level. But you have to admit that since the market got over the 18-week average of closes, it has done its job of holding. You can see the market has spiked to the upside, and we had today a new high, lower close. Could be the beginning of a mini correction or more. The pattern is still bullish, higher lows on the swing line. And what the swing line does, I want to remind you, it looks back to the bar before it. Do you have a higher high, a lower low going on? Do you have an inside week, an outside week, or an outside week down? I devised the formula, then I plotted it. So the risk associated in being long is you don't want to see the market under 52.1650. Other than that, it's still very much in the bull camp. And what's happening is the 18-day moving average of closes is on a tear. It wants to run up and get beyond that, so on a break, it doesn't break the pattern of it. Right now, it's still under it, but it's moving to the tune. If you and I look at it, well, I can't do it. That's going to move instead. But it's probably moving 15 points a day or so or more. I didn't check it, but it's my guess. Let's see if I can get it to do it here. It might do it for it. Not, it's going to all do it that way. Okay. So higher lows, higher highs, you hit the upper Bollinger Band and you're slipping back. What are the odds of staying over Bollinger Bands? 5% of the time. That doesn't mean you go short always looking for this break because it doesn't always get down there. You can break rally, break, rally. And that's very typical, especially if you have this pattern. It's called the embedded slow stochastic pattern. It's the most bullish thing I know about in terms of momentum. So this combined with that gives you a trade scenario. When we take a look at the NASDAQ, it's the same. You've got the bullish pattern, you hit the upper band, you're backing off, so what? Market's not doing any real damage with that. Same in the Dow. And what about the Russell? Same in the Russell as well. So far, the pullback in the market isn't doing any damage. If and when the momentum gets a close under 79, then I look for more of a correction to take place. Until then, I think the pros are peeking at the market going, is this going to be enough of a break in the market for me to come in and look for the market to rally again? When we take a look at the 10-year notes, you can see this market's developing also. It's bullish momentum here. And if it does that, watch out. Again, I can't do that. I forgot. I know what happened there. I should have saved it and then I could have done it. But you're developing the bullish embedded momentum. You're not there in the 5-year notes. You're overbought. A very big difference. You can afford a pullback, but you're not trending either. You certainly can see that the market has moved higher. And since the market's been over the 18-day average of close, you've been holding in a bullish pattern. That's part of the work that I do, and it's exactly how I interpret it. Whereas the dollar got down to the Bollinger Band, you're getting a bounce and you're in an oversold area. If it extends the break, yes, then I can make an argument 103.71, the 100-day average to the 200-day at 103.64, but it doesn't have to go there. It can bounce around here up to the 18-day average, but so far it's in a support zone, whereas the euro is in a resistance area, and now it's fighting the 200, the 100-day average in the upper band. And that combination, it's like running into a brick wall at first. So be a little cautious here. I think the pros are probably taking money off the table in that right now. In the British pound, what about this baby? How she came alive. And this is the highest high you've made in a long time. You're back up into these highs in the pound. So everything that we're looking at in foreign currencies have jumped in value against the US dollar. That is a big turn from where you were 3 weeks ago. Dollar was reigning supreme, not the case right now. In Bitcoin, the market is saying, value has been found at the 18-day average in the 62,900 zone. But to get there, you had to get overbought. I seriously doubt you're going to come out the upside for very much right here in the Bollinger Band, purely because you're overbought. No other reason than that. Then I take a look at Brent versus WTI oil. It made new lows and it's getting a little bounce tonight, but that's a new break low. But as I told you yesterday, and I'm going to repeat, the first challenge typically of the 200 and 100-day average, especially when they come in together. Traders look at that, and or algorithms that they build look at that. And I think the pros have been taking any short money off the table there. The same thing in the WTI. The resistance is the 18-day average, close back over that, and the market will look very different than it does right now. Gasoline, the same thing. Just yesterday, what did we talk about? And here I can get this one to move. Here we go. When we got down here, I said between the 100-day average to 200, maybe you go to the Bollinger Band, you are embedded, but the market's likely to give you a bounce right here. You're getting your bounce. This is very typical, but the resistance should be pronounced at the 18-day average, and with tonight's action, you're losing that bearish embedded reading, which gives more cause that it could rally to that 18-day average. It doesn't have to. You lost the reading right into the 100. That's all that it owes on the type of work that I develop on it. Last in the nat gas, I still remain very bullish in this market. You have the embedded reading. I'm wondering, are you going to get the 18-day average to cross over the 100? And that would add more fuel to the fire. But this market looks as though, and I've said this to you before, a major bottom has been formed at this point in time. It will take something else to hurt this market. And if you think about it, I think it was caused by President Biden. Remember, he put out that rule doesn't want any more natural gas found. He's putting got to have a report on all this. That all coincides with when you bottomed out here. It didn't help him when he said that, or maybe he wanted to form a bottom, I don't know, that you're already at very depressed levels in the 190s, and the market has come alive and added very quickly 25 to 40% value back in the market. So think about that part. Now, as I told you, I did a special report, and the report is on gold and GLD. I look at the seasonal charts, the price counts, weekly charts, and daily charts. I look at the key indicators that I use. I give you trading ideas on it. All you have to do is go to iraepstein.com. And when you get there, go to the research area and you'll see the report. It's there. It's only up for 3 business days. So you want to take a look at it. And once it's gone, and I get people write me all the time, well, can you let me see it? No. You've got your 3 business days to look at it. Just go in there and do so. In the meantime, I'm Ira. You have yourself a great evening. I'll catch up with everybody first thing in the morning. Trade well.